Welcome back, fellow investors. In this video, I'm going to be covering a high-risk REIT by the name of Medical Properties Trust. And I cover this company probably once a month. And the reason for it is it's a high-risk investment. And they have their earnings released about a week ago. And I have a fresh set of financials to take a look at and reevaluate the company. My name is Victor, and I share my experience on YouTube just around my investing journey. None of what I share should be taken as investment advice, or I'm not recommending that you buy Medical Properties Trust stock. I just wanted to share my experience in investing in this company. I'm going to share my analysis and tell you what I'm going to be doing with the stock, whether I'm going to buy more shares, hold, or sell my shares. Do me a favor and like my video and subscribe to my channel. And also, please leave a comment on Medical Properties Trust. Let's take a look at this company and go through my process. So a company that is had trouble and frankly has a risk of going bankrupt really needs more analysis more often. And that's why I'm evaluating the company at least once a month. And I go over a clear criteria that I repeat. And this is my process that I'm going to share with you. And my process is really to take a look at the company. Do I believe in the company? Do I understand the business? Do I understand the industry? Do I think they're operated well? I want to look at, in the case of REITs, the dividend payout. REITs predominantly are an investment where you're trying to get a really good dividend rate. And that dividend is really important. So it has to be less than 80%. So I want to do the calculations and make sure that's the case. And I want a discount on the stock. I'm a value investor and I want to buy stocks at a discount. So that's a key criteria. And based on my evaluation of these three factors, I will buy, hold, or sell a stock. MPW is a REIT, and they provide properties to healthcare related companies, hospitals, clinics, and so forth. And I like the healthcare space. I think it's stable. In this case here, MPW got themselves in some trouble by leasing out to a lessee that couldn't pay their lease payments. So that really affected the company. It affected their income statement, their profitability, it affected their cash flow, and it affected the dividend rate that they were paying. They've had to cut it a few times, and it dramatically affected their stock price. So the proposition for this company is, am I buying a company that is going to bounce back and double in value, if not triple, very quickly, and pay a pretty sizable dividend during that time? Or am I buying a giant bag of problems that's going to cost me a good part of my investment? Well, that's called investing. You take on risk and expect a particular return. And I have certainly invested in MPW and tracked the company closely. I think the management team is doing a good job in trying to repair the problems, sell off some properties, and get the business on stable ground. MPW announced their earnings a few weeks ago, and I wanted to take a look at their financial statements and assess the company, starting with the income statement. So for the quarter, the overall top revenues did go down. As expected, they're selling off some properties. For year to date, again, their income did go down. One bright spot is that they're profitable. That's very good that they're profitable in the quarter. And year to date, they are in the black. The funds from operations look good for the quarter. They had very good funds from operations. It's well above their dividend rate. So that's very good to see. And for the year as well, it's a good rate of funds from operations. And that's one of the key metrics for a REIT, because the REITs usually pay a good percentage of funds from operations. Taking a closer look at funds from operations and guidance. So this is the guidance they're giving for the year, which is good that they're doing that. And from funds from operations, they expect on the low side is going to be $1.56. The dividend is 15 cents for Q3 and 60 cents for a full year. Funds from operations for Q3 was 38 cents, and funds from operations for the year is being guided at $1.56. So the payout ratios are pretty low. The payout ratio for the quarter was 39%, and then 38% for 2023. It's good that the payout ratio is nice and low. If the business continues to get better, the funds from operations are going to get better, and this dividend payout ratio is going to be even better. So that's good news on the funds from operations. I believe that MPW is discounted by 43%. When I look at the value of the company based on the dividend they're paying and the earnings per share and discounting those earnings per share. First, looking at the dividend, they pay 15 cents a quarter, so that's 60 cents a year. And here's the formula where I discount that dividend rate, and I get to a stock price, or a stock value, excuse me, of $6.67. But you can buy shares at $4.58. So just looking at the dividend, it's discounted, the stock is, by 46%. Earnings per share, looking at the earnings per share that I expect for the next 4 quarters, a low PE of 10, growth rate of 4%. I discount those earnings per share and get to a stock value of $6.75. But you can buy shares for $4.58, so there's a 47% discount. When I average the two, I get to about a 46% discount on MPW stock. Looking at where MPW stock has been for the last year, it's obviously been on a downturn. It's worth maybe a third of what it was worth about a year ago, which is really interesting. And really, there's a lot of fear in this stock. Obviously, there's a lot of fear that people think it's going to go bankrupt. And there's a lot of shorts on the stock, shorting the stock. So that's interesting. I happen to think they're going to continue to be a viable business. Their financials tell me that they're okay, that they generate enough cash to keep the business going. They have properties that are very valuable that they could sell. So it is interesting to see a stock chart like this. I think it shows that this stock is nicely discounted. And if they make it, I don't think many people would argue that this stock's really going to fly up maybe to the $10 to $15 value very quickly. But for now, it's down 60%. So it's a pretty good loser for 2023. But they do pay a high dividend of 13%. So that's pretty neat. If the stock could just go up a little bit, you're automatically a big winner because you're 13% plus any appreciation that you would see in the stock. Now that I've looked at the company, assess where I believe they're at, look at the dividend payout ratio and the discount offered on the stock, what should I do with MPW stock? Well, let's take a close look and review each category and then make a decision. So I do like healthcare. I do like REITs. So that combination is a positive. I like the properties that MPW owns. I think they're good properties. And I think the management team is dealing with the problems they have, and they're getting through it. I like that they're selling some properties off to create cash so they can get themselves to a very stable ground for the business. The dividend payout ratio is very low right now, as I showed. So that's very good. And they offer a pretty good discount. So I'm going to be buying additional shares of MPW. It's a high risk stock, so I'm not going to buy a lot right now. It's a small position. It keeps growing because I keep buying, but I'm going to buy some more shares. Thank you for watching the video. I hope you found it interesting, and would love to hear your comments on MPW. It is a high risk stock. No getting around that, but it's also really interesting. I think the financials tell one story and the stock price tell a different story to me. I hope you found the information interesting. Please like my video and subscribe to my channel. Thank you for watching.